Welcome to America's Commercial Real Estate Show. America, your source for intel, forecasts, and success strategies. I'm Michael Ball. Thanks for being with us. We also like to thank you for 7 years of being on air. We've done a show every week. That's 364 shows that we've done. We hope we helped the industry. We hope we've helped you in some way. We certainly appreciate your likes, your shares, your comments, and your subscribe. So thanks for being with us. Well, today we're going to talk about retail real estate. I think retail has been a very interesting sector in commercial real estate. Maybe a lot of opportunities, maybe a lot of turmoil. Well, let's see what's happening. Have an expert on the phone with us today, Jim Costello. He's Senior VP with Real Capital Analytics. Jim, thanks for joining us.
Thanks for having me.
So, Jim, I think one of the biggest questions my audience may have right now is you guys do a great job of tracking investment property sales. When you look at retail sector, what are you seeing for cap rate trends today?
Right now, the funny thing with all the negative news around retail, you might think that investors are running away and cap rates would be going up, but really they've been flat over the last year. Now they're at record lows. What we saw for August, we just published our August figures this morning. They averaged around 6.5% nationally. That's about 80 basis points lower than the long-run average for the sector. So it's at a record low, but so far, there's just not pressure to push them up.
I see. And if these cap rate trends now, they're kind of flat. Have they been flat for a while? What's the past look like?
Yeah, they have been flat for some time. They've been flat over the last year. There was a little bit of movement for a very temporary basis right after the election in 2016, and with the increase in interest rates that happened for a short period of time. But the interest rate increase quickly corrected itself, and so cap rates really fell back to where they were. Over the last year, except for that, there's just not been much movement.
Okay, and Jim's with Real Capital Analytics, and they track investment property sales and commercial real estate sales, and they pretty much concentrate on properties that sell over $2.5 million. So, Jim, is there something about maybe the properties that are selling today or not selling today in that over $2.5 million price range that are impacting cap rates? Is it maybe the better properties that are still moving?
It's a funny thing on that market. In some sense, the better properties, the best properties, don't sell, period. There's a lot of talk around the retail sector and a lot of negative headlines surrounding it, but there's still great retail properties with cash-flowing tenants and key locations that are going to survive whatever comes with internet retailing becoming showrooms, a mix of the bricks and mortar and clicks. Those assets, if you've got that and you've got that fortress location, you're not so disposed to selling it. And then there's other retail that is just not going to be susceptible to the predation from the internet. Think of all the local service kind of focused retail, and especially food and entertainment. That kind of stuff is just you can't get yourself a pizza emailed to you. So even if Domino's is delivering it, even if you send an email to them and they deliver it, they still need a place to do all that. So that kind of retail is still has a reason in the economy to be there, and it's the challenge is that even stuff like that gets painted with a broad brush of it's tied to retail. And from the board level on down, people are aware that there's some broad challenges that retail faces, and they've just been a little too skittish. I think there's opportunities in retail, in locations that are more fortress like that.
And I want to ask you, and Jim, I want to ask you about the opportunities. Before we go there, I want to touch back on what you're talking about on the sentiment, because you guys are in touch with a lot of the investors that are buying these properties. You're tracking these sales every day. So you mentioned the sentiment is, hey, maybe there's some issues with retail. So if I've got a great performing asset, maybe I don't sell it. But also you have investors who like to say, hey, if there's a little bit of turmoil, maybe there's opportunity there. But a lot of these investors have to get loans on these properties. So what are you seeing with lender sentiment?
Yeah, the interesting thing about lender sentiment is that in this year, for commercial property broadly, we've seen a resurgence in CMBS lending. CMBS lending is back because they finally figured out risk retention rules, so they're able to effectively provide capital to the industry, and they're growing as a share of all lending for every other property sector except for retail. Retail, where CMBS is probably a natural fit for a lot of these kind of diverse portfolios and smaller assets in multiple markets. That should be a fit for lending, but just didn't grow this year. There's still some hesitancy from the folks who might buy those bonds eventually to get into anything tied to retail because of the broad negativity on retail. So the folks who have been stepping up and who have gained market share on lending are the local and regional banks. And to me, that kind of makes sense. If you can't get a group of folks in New York to package a security that includes a couple retail buildings in your market, well, you can talk to Martha down at the Savings and Loan, and she can arrange a loan for you because she's more intimately familiar with what happens at the corner of Main and Main.
Yeah, that makes a lot of sense. And but like you said, they're there. They're shopping there. They know how popular the property is and have a better comfort level. They're not sitting in a boardroom or have investors that are saying, "Is it retail in trouble right now?" Well, we're talking with Jim Costello, and he is with Real Capital Analytics. And Jim, you mentioned opportunity, and it seems like retail properties, when you look at them, they are great real estate. In other words, they're usually pretty cleared, they're pretty level, they've got utilities, they're on good streets. Where are there opportunities in retail today?
The opportunity, I think, in retail is in the fear. To the extent that too many people are walking away from it, and walking away from the opportunities in those locations that come what may with how companies reach consumers. They're still going to need key locations like that. I think that's the key. That's the opportunity to find those, while others are just a little too fearful at the moment.
Okay, so properties that maybe somebody does want to sell, maybe there's less buyers, so maybe some opportunities there.
I think that is the case. At the same time, it hasn't shown up in price trends. Cap rates are flat, and our index of commercial property prices, it's not growing as quickly as it had. It's only about a 1% year-over-year growth at this point versus commercial properties broadly growing around 7% year-over-year. But it's just not showing up yet in terms of discounts and pricing.
Yeah, well, that's interesting. Well, Jim, I want to ask you about where you think we are in the cycle. I want to ask you about interest rates impact moving forward. And then something that's big on the minds of people today is the changes in the tax code, maybe the potential repeal of the 1031. We're going to take a short break. We'll be right back with Jim Costello with RC Analytics. I'm Michael Bull. This is America's Commercial Real Estate Show.